Welcome to the Closing Bell. This is a new update that we're putting together. Look, I'm Murray Dawes and I run a trading service at Port Phillip Publishing. So I am a trader, and look, I've watched a lot of market wraps before, and most of them, quite frankly, are pointless, and you don't learn much, and you just find out what happened in the past, and it's a waste of your time. So I'm really hoping that I can bring you a few things, talk about the week, and what you should sort of be focusing on next week, where opportunities may lie, and how I'm seeing things out there. So what I want to start with is really just looking at the ASX taking off, continuing to create new all-time highs. And really the big story of the week is that the US bonds have rallied quite strongly. And that really adds support to the rally. You could probably be wary of, going forward, if you do see prices turn back down and we actually fall back below the old all-time high from last year, then you've got to be a bit wary of the false break of the high. That's one of the key sort of things about my trading model, is to be wary of those things. But until that happens, you really have to allow this rally to continue and to potentially really break out and go for a long time. And with the US bonds rallying like they are, it's going to support especially those tech stocks, and will support the rally as long as those US bonds stay well bid. So let's have a look at the US bond chart. I'll just show you what I'm seeing there. So this is the US 10-year bond yield chart. So it's important that you know it's the yield chart. So when the yield is dropping, the price of bonds is going up. And when the yield is going up, the price of bonds is falling. So you can see that the yield this week, and this is a weekly chart, the yield dropped quite substantially over this week, and that really is the big story of the week, that the long end of bonds is actually rallying now after selling off quite dramatically post-COVID. Now, whether this is the start of a new trend all the way back down, I'm not sure, but the fact is that falling from the highs around 1.8% down to 1.44% where it is now, it's just going to take a bit of the pressure off, because with inflation starting to pick up and people wondering whether it's going to be transitory or not, there is a risk that those long bonds with the yields rising could really hurt the pricing in the stock market, especially in the tech sector. So the fact that sell-off in bonds seems to have stopped for now is going to be a bit of a tailwind for the market. But the way I see things is on the monthly chart, I actually need to see a monthly close below that lowest yield from a few months ago to create the sell pivot in the yields. So that would be a monthly close below 1.39%. So if the rally continued, if those yields continued to fall, and we got a monthly close below 1.39, then I could start to get a bit more bullish on those bonds, that yields may fall quite a bit further. But until that happens, I'm reserving my judgment. And apparently the rally is a bit of a short squeeze, that the market sort of got a bit short bonds, and we're just getting a bit of a reaction against that. So whether this rally can be sustained or not, we don't know. But just as far as the equities goes, it just makes it feel like the rally can actually continue in a straight line for now, without those bonds putting pressure on. And the next thing, after chatting with you last week, I was talking about the US dollar index, and saying that, if the short squeeze happens, watch out. And this is the monthly chart of that US dollar index going back, 10 years. So this is, the last 5 years trading within this range. And that's what I'm most interested in, is if the range breaks, down below 88, with the US dollar index currently trading around 90. If US dollar does bust that level, there is a chance of a really big fall in that US dollar index. So I've got my eye on that. But as long as it remains above this level, there is the risk that people are getting a bit short the US dollar, and we could actually have a bit of a reaction to the upside. And you can see here on this chart, I've got the what I call the buy and sell zones of that range. And you see in the past, we had a reversal up in that area, which headed back to that point of control. And we're in a similar situation where we're in the buy zone of that whole range. And this is a spot where there's just a higher probability that you can see reversals heading back to the point of control, which would be quite a big short squeeze, which would really hurt commodities especially. So for now, the US dollar does actually look pretty weak. We do have the monthly sell pivot, which got confirmed last month. So for now, it is actually looking pretty dodgy. And, 89 would be the first line in the sand, being the lowest price for the last few years, really. And then below that would be the next domino to fall, which would be the low from 2018. And I don't know how much support is below there. So keep an eye on that, because that will inform the trading in stocks. And this week in stocks, one of the main moves we're seeing is actually in, probably one of the hated areas of the market is coal, thermal coal, taking off to the upside. Here we have New Hope Corporation. Now, this is actually a new trade in my trading service, Pivot Trader, from last week. And you can see that we're seeing a false break of a major low from 2016. There's been a lot of work done over the last year around that level. And with thermal prices taking off, we are seeing that false break confirmed and a shift in long-term trend. So really could see quite a sizable spike in these coal stocks. And also, if we look at Whitehaven Coal, it's a very similar situation with the long-term trend getting close to shifting. If I look at this whole wave down, this is a monthly chart going back for years, and we have the buy zone of that massive wave down from 2011 to 2015. So it is an area where we can see a reversal in prices, and we've already got the monthly trend starting to march higher. So you could be looking at a move back to that point of control up above $3, approaching $4. So yeah, some good strong buying coming into those coal stocks. And you'd think with all of the regulatory and political pressure on those stocks of not lending money to open new mines, et cetera, that as demand increases in Asia over the next decade, that really the producing coal mines may really make a mozza as the price of coal goes up, because it's hard to get new supply coming online. And just to follow up from last week, I was chatting about Origin, so a couple of the oil and gas stocks, all looking very strong and continuing to trade higher. And you saw with Origin, this is a weekly chart. I was looking at this range, and again, we're in the buy zone of that whole range from the last few years trading. It's done a lot of work. It's been quite weak. We've had, a couple of lows here, like a triple bottom. And I was saying last week, you want to watch after that 15% rally, and Origin has managed to continue on to the upside. So yeah, some of the other oil and gas stocks as well, looking pretty interesting if oil prices can continue the breakout that they're doing. And finally, just want to finish up. It looks like there's a bit of money coming into the theme of a recovery internationally in COVID. We've got, this is another trade in Pivot Trader recently, but just wanted to bring your attention to the fact this is BVS, which is a fund administrator, software for the administration of funds. And they've got a lot of revenue out of the UK, and they've been hit quite badly. As you can see, they had huge growth for years, 2017 to 2019. Then they got hit by Brexit and then by COVID as well. So their growth rates really came off. But you can see that just in the last couple of months, it's really starting to turn back up from the buy zone of that whole wave. We've got the buy pivot in place, and now prices starting to rocket higher through the point of control of the whole wave. So, there is some buying coming into that theme of a recovery in companies that have been affected internationally by COVID. Also, Unibail Rodamco starting to see some buying as well. You can see it's been a one-way traffic there going into the COVID crash. And we got a bit of a bounce back. It's been a lot of work done, but just in this last month, it's starting to break out and march a bit higher. So a bit of money coming into those ideas. And I think that will be a theme that will continue going forward. So I hope you enjoyed that. I will be back again next week with another update. If you're interested in learning a bit more about my trading service, definitely click on the link below. And otherwise, I will chat with you next week. Cheers.